All right, we'll start with this chapter, chapter number 11,
Okay.
ethics and terms of audit engagements. So, in this particular chapter, we'll be studying what is the meaning of ethics, what are the need for professional ethics, इसके fundamentals क्या है, what are the independence of auditors, what are the threats to independence, professional skepticism, SA 210 comes here along with SA 220, and we'll be seeing practicality of above concepts using examples. So overall, we see independence of mind plus independence in appearance is auditor's independence. So in order to an auditor to be independent, he has to be independent both internally and externally. In his mind, in his thought process, along with his actions, that is an appearance, shows that audit is independent enough to carry on the audit. So there are three essays which we're going to look here. Essay 210, that is auditor's responsibility in agreeing the terms of engagement. Second is engagement partners' responsibilities with respect to relevant ethical requirements. And the last one is SQC 1, that is responsibilities of the firm for establishing policies and procedures regarding compliance with ethical requirements. So, all the three are related to auditor's responsibilities and ethical requirements in an organization. Then we see 5 types of threats, which are to independence, self-review threat, advocacy threat, familiarity threat, intimidation threats, and self-interest threat. So we will go to these one by one and understand what does these means. This is just a short info about ethics, how every human activity and everything is based upon ethics, and ethics is considered important in our life. An example is given here. Samir was trying to understand importance of ethics in the profession of chartered accountancy. He was wondering whether a code of ethics exists for chartered accountants and how exhaustive it would be. So, based upon his understanding till now, he was certain that the auditor must comply with ethical requirements while conducting audit of financial statements. He knew that auditor should be a person of impeccable, sorry, unimpeachable integrity. So auditor gives an opinion on financial statements and he has to maintain sanctity and credibility of his signatures. And it is necessary, very, very, very important that auditor should comply with ethics. So a parallel stream of thoughts was also gaining momentum. That is, should an auditor follow only those requirements who have been clearly laid down? What about the situations where his independency comes into picture? And most importantly, how should an auditor proceed in a situation where his independency on a sticky wicket due to extraneous factors? So here there's a chartered accountant, his name is Samir. Now he is analyzing how is ethics along with the concept of independency important. Okay, so here ethics is explained. Term ethics means moral principles which govern a person's behaviors. It is a branch of knowledge that deals with moral principles. Ethic is something which comes from individual intrinsically. So Whatever is coming from inside a person is termed as ethic here, which is a habit, which is a temperament of an individual. And there is an overall culture of ethics that has a strong force, which is without any selfish motive or temptation. It is a state of mind wherein the auditor can act. It is a science of morals in human conduct, and such morals, principles, and rules impose obligations upon individual. What is right, what is wrong, what has to be done, everything comes under this ethics. And what is ethics? It is a state of mind. Clear till here, Anil?
Yes, yeah, ma'am.
Okay. All right. Next is need for professional ethics. Okay. What about the speed? Is it okay or shall we fasten enough?
Yeah, you can fashion enough.
All right.
Yeah.
Next is need for professional ethics. So professional ethics and various professions like law, medicine, they have their own code of ethics. Auditing profession is no exception. So audit also there is its own set of professional ethics. There's a reason in general government, clients, taxing authorities, employees, investors, business in the financial community, they have their tremendous trust by the services which are rendered by chartered accountants. The purpose of this insurance engagement is to enhance confidence of intended users. So professional ethics basically are based on morality, human nature being placing its personal gain above service. Therefore, person who are individuals, okay, they are willing to place public good above their personal gain. So considering society's honor, society's respect, society's welfare above own personal good is, and whatever is in public interest comes under professional ethics. So a distinguishing feature of accountancy profession is its acceptance of responsibility to act in public interest. Apart from this, a chartered accountant who is in practice or in service, he has to maintain ethical behavior. So same, there is a code of conduct which has to be followed and maintained by chartered accountants also, and that thing is made by the CA fraternity, the institute, as code of ethics. Yes, Anil? Yeah. Did you say something?
No, ma'am. Okay.
Okay. So next is principle-based approach versus rule-based approach. So there are two approaches basically. For ethical guidance, chartered accountant may follow principle-based approach or rule-based approach. So principle-based approach is compliance with spirit of ethics. Here, accountants need to exercise professional judgment in every situation based upon their professional knowledge, skill, and expertise. Wherein in rule-based approach, it strictly follows a clearly established rules. So this is a narrow outlook, and spirit of ethics may be overlooked here because there is strict rule. Rule-based approach is rigid. Okay, no flexibility is given here, and whatever condition or situation comes, with every practical situation, it is necessary that the spirit of code is followed. So two approaches are there here.
Okay.
Principle-based approach, which is independent enough. Auditor can use its professional judgment, and rule-based approach, which is very strict and rigid in nature. We'll come to fundamental principles of professional ethics. So, seeing a broader picture, there is professional behavior. Going to then macro terms, confidentiality comes into picture, professional competence and due care, consist confidentiality and professional behavior. Along with it, objectivity on a narrow side, on a broader side, and integrity as all of them. So we'll see first of all what is integrity. So a professional accountant shall comply with the principle of integrity, which is an accountant need to be straightforward and honest. Integrity implies fair dealing and truthfulness. So a professional accountant shall not knowingly be associated with reports, writtens, communications, or other information where the accountant believes that the information is materially false or misleading. So, what is integrity? Integrity is basically a principle wherein an chartered accountant needs to be honest, straightforward, and he has to be very fair enough in all his dealings. Next principle is principle of objectivity, whereas auditor cannot compromise professional judgment because of bias, conflict of interest, or undue influence. So auditor has to be very professional enough, and it requires to undertake all decisions on his professional judgment and not upon somebody else's influence. Next is professional competence and due care. Here, a professional accountant should comply with the principle of competence, professional competence and due care. That is, he has to maintain professional knowledge and skill at the level required. Along with that, he has to apply technical and professional standards as well. Again, diligence includes responsibility to act carefully, thoroughly, and on a timely basis. Next is confidentiality, very important. Confidentiality is maintaining the information or its confidentiality and not disclosing it to a third party or to a party who is not related to the organization. Next is professional behavior. It requires an auditor to comply with relevant laws and regulations. So, professional accountant should not knowingly engage in any activity, employment, or occupation that may challenge its integrity, objectivity, or good reputation of the profession. So, anything which makes the auditor incompatible with the fundamental principle is something the auditor shall not engage in. That is called professional behavior. So, 5 points. Are you clear with this?
Yeah, ma'am.
All right. Next, very important topic here, independence of auditors. So, professional integrity and independence are essential characteristics of all the profession, but more also in accounting profession also it is required. So, what is independence? Independence is judgment of a person which is not subordinate to the wishes or direction of any other person. Whatever the decision an auditor is taking, that is on his own judgment and it is not under somebody else's wish or subordinate to other person's direction. That is independence. So we cannot, you know, define independence precisely, but there are certain rules of professional conduct which gives us a framework. And these legal standards may be relaxed or strengthened. But whatever the quality of independence is, that shall remain unaltered. So there are two interlinked perspectives here. that is independence of mind. Another one is independence in appearance. So we'll see what this means one by one. Independence of mind is a state that permits provision of an opinion without being affected by influence of others. That is, the auditor has to act with integrity and exercise objectivity and professional skepticism. Next is, so this is internally, okay? Next is independence in appearance. Now, what does appearance here actually means? That avoiding the fact and circumstances that are so significant that a reasonable and informed third party, which is having knowledge of all relevant information, that everything is based on auditor's integrity, objectivity, or profession. Sorry. That is upon integrity, objectivity, or professional skepticism. No compromise has been done to that. So, independence of auditor does not only depend upon the fact to all reasonable persons, but the relationship between auditor and client should be, first of all, based upon independence, and no unbiased person would be forced to a conclusion that can cause an abridgment to the auditor's independence, that is, breaching or coming in between of this virtue of auditor's independence. So here, say for example, if a statutory auditor is of a listed company, the chartered accountant would cease to perform any useful function that is against independence and against integrity of chartered accountant. In this case, the auditor is expected to be objective in his approach, fearless, of honest opinion, and independence is dependent upon state of mind and character of a person. So one person might be independent in a particular set of circumstances, wherein another person might feel he is not independent. So it is a subjective perspective. But auditor should behave in such a manner that in no position he would compromise his independence. Are you clear about these two types?
Yeah, ma'am.
State of mind and appearance.
Yeah.
So there are possibilities that while conducting audit, there come various situations, different circumstances or combination that pose a threat to its independence. So there are five types of threats which are highly recognized out of experience. First is self-interest threat. Self-interest threat occurs when a auditing firm, its partner or associate, he could get some financial interest in the audit client. Example, a direct financial interest or materially significant indirect financial interest. So the auditor is getting some financial gain, okay, from the client. Second, loan or guarantee. The auditor is getting a loan or guarantee from or to the concerned client. Undue dependence on client fees is there, and hence auditor has to behave in such a manner that he cannot pinpoint small mistakes so that he cannot lose that engagement. In order, okay, only English, Anil, right? Hindi
Yeah.
you're not comfortable with.
Okay, ma'am. No issues. Hindi also.
uh, yeah. So the main bread and butter or the source of auditor is upon that fees, that is undue dependence is there. An auditor always has this fear of losing the engagement. This again comes under self-interest threat. Next is close business relationship with an audit client. Okay, somewhere the auditor is related, relative, friend or associate. This comes under again self-interest threat. There is potential employment with the client and fees for the audit engagement. These are the examples where self-interest threat comes into picture and the auditor cannot be independent enough. Next is self-review threat. So this self-review threat occur when during a review or judgment, out of previous audit or non-audit engagement, where a member of the audit team was previously a director or senior employee of the client. So here, what is happening is auditor or member was previously related to the company. He was an employee, senior employee or director. And here, any professional services or non-audit services has been done by the chartered accountant earlier. So when auditor has been recently a director or senior officer, or when auditor performs services that are themselves subject matter of audit. If auditor is preparing the law or internal system of the company, will he pinpoint the mistakes done in the system? No, because he himself has made it and he is doing the self review. In this case, self review threats come into picture. Is the second point clear to you?
Yes, ma'am. Clear.
Next is advocacy threat. Advocacy threat is perceived when client's opinion to a point where people may believe that objectivity is getting compromised. Okay. Example is given where auditor deals with shares or securities of the audited company, or he becomes the client's advocate in litigation and third party disputes. In this situation, it can be seen that the auditor is backing and championing causes of auditee client, and this may lead to belief that the auditor is not acting and working objectively. See, if the auditor becomes lawyer of the company or he is fighting litigation or third party disputes, auditor would try its best to cover up the litigation and make the client win in the particular suit or law case. Here
Okay.
again, its independency is challenged and advocacy threat come into picture. Feel free to stop me and ask any doubt which you have, okay?
Yeah, ma'am.
Is
Okay.
the third threat clear to you?
Yes, ma'am. It's clear.
Advocacy threat?
Yeah.
Speed is okay or more fast enough we can go?
Yeah, we can go more fast, ma'am. It's okay.
Uh, all right. Familiarity threat. Familiarity threats are very self-evident. It occur when auditor forms relationship with client, okay?
Yeah.
So what is being here? Auditor is being too much sympathetic to the client interest. Examples are given where the auditor is a close relative of the audit working team in a senior position with the client company. The auditor was former partner that is related to the company. There are long associations between specific auditor and client counterparts, and there is acceptance of significant gift or hospitality. The auditor is getting gifts, for example, auditors kids school fees, or getting cars or properties, gift
Okay.
jewelry from the client. These all things comes under familiarity threats. The last one is intimidation threat. It occurs when the auditor is deterred, he is stopped from acting objectively with an adequate degree of professional skepticism. So basically, this could happen when the threat of replacement over disagreement comes into picture. The auditor always has this pressure. If I do not comply with management's expectations, I would be replaced.
Mm.
This is called intimidation threat, where he cannot act objectively and his professional skepticism cannot be adequately used. So, five threats.
Yes, ma'am.
Are these all clear?
Yeah, ma'am. Self.
Chalo, we'll quickly go to the next safeguards to independence. So here, chartered accountants have responsibility to remain independent. Again, to address this issue, following principles are applied. First of all, for public to have confidence in quality of audit, it is essential that the auditor has to be independent. Before taking any work, auditor must conscientiously consider whether any threat to independence is involved. If there is any threat, auditor should either desist back from the work or eliminate the threat. All these safeguards should be taken. If the auditor is unable to fully implement credible and adequate safeguard, he should not accept the work. So these are the four principles which has to be taken. First of all, the auditor has to see he has to be independent enough. He has to check whether there are any threats to independence. If there are any threats, auditor has to check whether threats are to an acceptable level. If no, he should not accept the work at all. Clear with the 4 points?
Yeah, ma'am.
Next is professional skepticism. So, what is this professional skepticism? It is an attitude, basically, which includes a questioning mind. Why are the things so? Why are so heavy loans given to the directors? Why is interest-free loan given to the employment? Why are the assets purchased on the name of promoter and not the company? So these are critical assessment, which can include or which can indicate a possible misstatement due to error and fraud. This is where professional skepticism comes into picture. Auditor has to remain alert forever. It is the auditor's attitude which should be of questioning mind. Auditor shall perform and plan audit with professional skepticism. So examples here are given. Audit
Okay.
evidence that contradict other audit evidence obtained. This comes under professional skepticism. Second is information that brings into question the reliability of documents. Say, for example, we see all the documents which the company has maintained. On the other hand, we see that this information is correct because there is no underlying evidence as invoices. Again,
Okay.
comes into picture the reliability of document is evident or not. Auditor has to see the conditions that may indicate possible fraud and the circumstances wherein extra audit procedures, that is, additional audit procedures, are required. So, auditor has to maintain professional skepticism throughout the audit. That is very important to reduce the risk of overlooking unusual circumstances, overgeneralizing when drawing conclusions, and using inappropriate assumptions in determining the nature, timing, and extent of audit procedure. So, professional skepticism is very necessary for the critical assessment of audit evidence. This includes sufficiency and appropriateness of audit evidence. Auditor may accept records and documents as genuine unless the auditor has reason to believe the contrary. So, to the level auditor has all the records and documents which makes it believe everything is fair enough, it is okay. So, auditor always has to be alert in nature and questioning whether there is no fraud and the information which is available is reliable enough. Clear with the professional skepticism part?
Yeah, ma'am.
All right. Next is audit engagement. What is audit engagement? So basically, it is auditor engaging or involving in the client and its financial statements. It includes matters such as objective and scope of financial statements, responsibilities of auditor, responsibilities of management, identification of applicable financial reporting framework, the FRF, and all the contents of report that has to be issued by auditor. Now, first of all, we see agreeing the terms of audit engagement. As a 210 comes into picture here, it is the auditor's responsibility that he has to agree the terms of audit with the management. Whenever an auditor comes into picture, there are basic terms and conditions. Those are called preconditions for audit. And it is the auditor's responsibility that he has to check whether I'm independent enough for carrying this audit or not. The objective of auditor is to accept or continue an audit engagement only when the basis upon which it is performed is agreed. That is, auditor has to see there is all the preconditions for audit are present, and he has to confirm that there is common understanding between the auditor and management. So we'll see the preconditions for audit. SI 210 gives us three preconditions for an audit. That is, auditor has to use the applicable financial reporting framework. If it is a company, form of organization, so the requirements of Companies Act has to be used. If it is a banking company, rules of banking uh, authority comes into picture. RBI rules come into picture. If it is an insurance company, the FRF, that is Financial Reporting Framework of an insurance company, comes into picture as per Insurance Regulatory Development Authority. So preconditions for an audit, it has to use an acceptable financial reporting framework in preparation of financial statements, and he has to agree to the premise on which the audit is conducted. Are these three things clear?
Yeah.
The same thing explained here.
Yes.
Then agree. There has to be an agreement on audit engagement terms. Auditor should agree with the terms which are discussed before. Each party should be clear about the nature of engagement. Everything must be reduced to writing. Written में सब होना चाहिए. Auditor shall agree upon the terms if it is clear that it is in a suitable form, and auditor shall take an letter which includes the objective and scope of the audit, responsibilities of the auditor, responsibilities of manage, and identification of the applicable FRF, that is Financial Reporting Framework. So also the reference to expected form of content and report in which the audit report is required. So now here is an example of audit engagement letter. Clearly the name of the chartered accountant, address, board objective, everything has been given here. So acceptance and understanding to audit engagement is mentioned here. Objective of audit is to have reasonable assurance. Reasonable assurance is high level of assurance, but not a guarantee that audit is conducted in accordance with essays. And responsibility of auditor is clearly mentioned here. Auditor has to identify and assess the risk of material misstatement. It can be due to fraud or error. Auditor should obtain an understanding of relevant internal controls of the company. Auditor should evaluate the appropriateness of accounting policies, whether they are fair enough and they are prepared on the basis of reasonableness. Auditor should conclude on an appropriateness of management's use of going concern. This is again one of the important auditor's responsibility. An auditor should evaluate the overall presentation, structure, and content of financial statement. Again, there are inherent limitations to audit, which are unavoidable risks. Hence, audit should plan its audit properly and it should be performed in accordance with SEs. After auditor's responsibility come management's responsibility as well. So it is the responsibility of management to prepare financial statements based on going concern basis. It is the responsibility of management to select and apply consistent, appropriate accounting policies. What are the various methods of depreciation which can be used? Okay, then again, FIFO or weighted average is used for inventory. These are all the accounting policies which management should choose initially, which is in favor of their company. Again, responsibility for making judgment and estimates that are reasonable and prudent. Say, for example, company has made certain provision for bad debt that has to be reasonable enough. That was one of the example. For such internal control, management should enable the preparation of financial statements which are free from material misstatement, and management should give access all the time to the information. Auditors should have access to books of accounts of the company, vouchers, other records and documentations. Auditor should take reasonable and additional information which may be requested from the management, and there should be unrestricted access within the entity from all the explanations required. Apart from that, the fees should be very clear in the engagement letter. Reporting should be done, and last may signature, name of the member and his designation. Clear with this? Any doubts so far?
No doubts.
Alright, next we see what happens if the preconditions are not present. See, if there is no precondition present, there is a lot of chaos and ambiguity in the system. So unless it is required by the law, auditor should not accept proposed audit engagement. If there are no preconditions, अगर auditor को पता ही नहीं है, if he does not know what is the applicable reporting, financial reporting framework, he should not accept the audit engagement. And second, uh, matters like internal control, their preparation, or there is an unrestricted access to persons is not there. In such cases, the auditor shall not at all touch that engagement. Apart from this, there is limitation on scope prior to audit engagement. If people, okay, who are those charged with governance, they impose some limitation. You cannot cross verify the bank accounts or the inventory. So here again there is a limitation, and in that case the engagement should not be accepted. So following are the situations where acceptance of change in terms of audit engagement comes into picture. So first is request from entity to change the terms of audit engagement. If there is a reasonable justification that is existing that can be changed, or else auditor should think if the change is required or if there is any misunderstanding. Next, auditor should consider the change in audit engagement level if it is providing lower level of assurance. If there is any lower level of, because reasonable level of assurance is very important. If this engagement is giving lower level of assurance, auditor should rethink about changing the terms here. Next is there any recourse available to auditor in situation of non-agreement? If non-agreement happens, does the auditor has any other way to come out of it? Is what is called recourse here. Terms of engagement in recurring audit. Now, what is recurring audit? Recurring audit is something which is performed by auditor over years, which is recurring, which is happening again and again on an immediate continuous basis. So The auditor may decide not to send a new audit engagement letter. However, following factors, if it is present, then there is a clear-cut need to change the audit engagement letter first if there is any misunderstanding. So in that case, the auditor can change. If there is any revision for special terms required, if there is a change in significant management, if there is a significant change in ownership, nature, size, or entities business, if there is a change in legal or regulatory requirements, if there is any change in reporting financial framework, or if there is change in any other reporting requirement. In that case, changing the engagement letter is very, very important, or else no. Clear about this?
Yeah.
Last is SQC1. So SQC1 basically deals with audit engagement, which include audit review and assurance. So it is quality control for firms that perform audit and other assurance and related services. So there are few elements of a system where the system is of a quality control. That is, the firm's quality control system should include policies and procedures wherein leadership responsibilities is clear. There are ethical requirements. There is acceptance and continuance of client relationship. Human resources, engagement, performance, and monitoring is clear. So these quality control policies and procedures, they all should be documented. It is very, very important that it is documented and communicated. And by communicating, the firm recognizes importance of having feedback. If you are letting the other person know you are open to change anything which is not viable or which is not important here. So elements of quality control here are these 5 points which we read above. Those are given in diagrammatic format.
Okay.
Sorry, the 6 points. Now, one by one, these points are explained. We'll take it in short. First is leadership responsibility. So, leadership responsibility is like it is the ultimate responsibility of the firm's system of quality control. Good leadership encourages inner culture and high quality of audit work is given. So there should be people assigned with responsibility like CEO, Chief Executive Officer, that is CEO, managing partners, and they should be sufficient experienced enough. Okay. Next is ethical requirements. So code of ethics, which is issued by ICI, that should be complied with. It clearly shows that independence has to be there in all the engagements. Such procedures and policies, they should be communicated. They should be identified and evaluated. And there should exist a mechanism in the firm which is helping the auditor to be independent enough. Next is acceptance and continuance of client relationship. So the integrity of client, its competence, that is including capabilities, time and resources to perform engagement and compliance with ethical requirements is also very, very, very important. So with regard to integrity, matters that a firm should consider is it should identify, there should be a proper identity and reputation of the client, the nature of the client's operation, including its business practices, are clear enough. Information concerning the attitude of the client's principal owners, those are clear with regards to internal control environment. Whether the client is aggressively concerned with maintaining firm fees as low as possible, this is again a concern. So in this matter, quality can be compromised. Indication of an inappropriate limitation in the scope of work, this is again a restriction. Indication that a client may involve in money laundering or criminal activity. This is again a no-no. reason for the proposed appointment of the firm and non-reappointment of the previous firm. So why is the previous firm not reappointed? Is there any fraud or error which the auditor has faced? That should again see अगर कोई भी conflict of interest है. If there is any conflict of interest between firm and client, it should be properly resolved before accepting that engagement. Also, auditor should consider that the professional requirements, okay, the professional and legal responsibilities are applied. The possibility of withdrawing from the engagement is possible if the terms are not in contact with each other. Next point, fourth point comes your human resource. Client should have, the firm should have sufficient people, bandwidth with them who are responsible, competent enough, and committed to their work. This is very important. If there are any policies or procedures which are having HR, human resource related issues, for example, recruitment, compensation, training, career development, performance evaluation activity. So this all should be highlighted there. Engagement performance to consistently consider the quality of engagement. Consultation should take place wherein that is discussion should take place wherever required expertise is required. Significant judgments are required on the part of auditor to review the quality control, and engagement quality review is mandatory for audit. In case there is difference of opinion, okay, the firm is considering something else and the auditor has something else in mind. In that case, the report should only be issued after resolution of the difference. Next one is monitoring here. The firm should ensure that policies and procedures are relevant, adequate, operating effectively, and complied with in practice. Then we come to SA 220, that is quality control for an audit of financial statements. So based upon quality control system, all these systems should be in accordance with SA 220. Those they should be quality wise enough to maintain the financial statements of the company. So here the objective of the auditor should be that it complies all the professional standards and the report is issued which is appropriate in all the circumstances. Again, the matters described above, leadership requirement, ethical requirements, acceptance and continuance, assignment, engagement, performance and monitoring should be clearly seen here. So leadership responsibility, that is leadership should be responsible enough and the actions of the engagement partner should be in such a manner that the work is quality. That is, all the compliance with professional standards are done. Firm's quality control policies are applicable. Auditor's report is issued which are appropriate, and the audit team's ability is there to raise concern without fear. Next is the fact that quality is essential in performing audit is very important. Clear so far, Anil? Do you have any doubt here?
No.
Hello?
No, ma'am, no doubts.
All right, we'll proceed to the next one. Relevant ethical requirements. There is no threat to independence. If it is there, it should be identified and reported. Next is acceptance and continuation of client relationship. It is the responsibility of engagement partner that all the information like principal owners, competence of engagement team, necessary capabilities and all are taken care of. Next is assignment of engagement team. That is engagement partner are experts Okay, and they collectively have appropriate competence to do that audit. They have that expertise or their previous experience in that field. An engagement partner has the responsibility for direction, supervision, and performance of audit engagement. Apart from this, engagement partner is also responsible for appropriate consultation on difficult matters. Like last year is monitoring. It should be monitored that the process designed is helping them with reasonable assurance. So engagement partner should document these things if he is having any issues regarding the compliance that should be documented. Conclusions on compliance should be documented. Conclusions reached regarding acceptance and continuance of client and the nature and scope of work, which is resulting from the undertaking course of audit. That should also be documented and highlighted here. So by this, this chapter ends. Question answer starts here. I'll just stop the recording process.